Hello, Patrick. Today I'm with Patrick Gibson of Minto Properties. He's the Director of Investments. How are you today?
Doing well, and yourself?
I'm doing well. We're at QAC 2023 in Montreal in the Palais des Congrès. And so Minto has been doing a great performance on the market and is one of the REITs right now that a lot of other REITs are looking up to. And is there a reason for the success that Minto had during the last, your first IPO was in 2018. You've roughly doubled your asset value since then. What is the basis of the success that Minto has had, according to you?
So I think it's a couple things. The first one is the fundamentals of multifamily in Canada. Very, very strong. You've got supply challenges in the major markets and record immigration. We've got foreign students that are at record numbers as well. So it creates this complete imbalance of demand and supply. And it's driving really, really strong rent growth in the major markets. We're seeing it in Vancouver, Toronto, Montreal, Ottawa, even Calgary now. We're seeing rents just soaring 15, 20% year over year. Second thing would just be that we're focused on core urban markets. So the big six markets and, the immigration that's primarily driven into those six markets. So we're really benefiting from that immigration.
So would you say that immigrants are a good part of what's coming in right now in your tenant base?
Yep. We're seeing quite a bit of that. Foreign students. Yeah.
How about age group? Are we talking about 25, 35 or over 55?
So we have buildings kind of across the portfolio that, we're targeting students and young professionals. We have other buildings where the average age is probably over 70. So we have a very mixed demographic. It really depends on the building.
Excellent. Two markets I wanted to talk to you about. First of all, the Gatineau market, which is more or less, really involved with the Ottawa market. And now they're intertwining as we go along. And the differentials in rents are starting to sink between each other. So you have like very similar markets. How is that market performing for you right now?
So our portfolio is all on the Ontario side of the building, or Ontario side of the border, rather. The market's strong there. I think rents are up 15 to 20% year over year. We've seen vacancy come down, incentives burned off. What historically was a little bit higher vacancy in the core during COVID. We're seeing that trend is reversing. So the Ottawa market's been performing very well.
Excellent. And how did you start to integrate Montreal? In Montreal, you've been purchasing for a few years now. What do you see in Montreal that you think that your investors like to see, basically?
So Montreal, for us, it's a core market. It's one of the large six markets in Canada, I think second in terms of population. So for us, it's really a market we need to be in. There's a ton of opportunity here. The renter versus home ownership ratio, a lot more people rent in Montreal. So you have a lot more opportunity to acquire scale and existing assets here in Montreal. We've seen in Vancouver, it's almost impossible to acquire existing assets. There's just people don't rent there the same as they do here in Montreal.
And are you only looking, when you're developing your portfolio here, are you only looking at Montreal Island? Are you willing to go off island? How does Minto foresee the first outskirt?
So we've focused purely on the island so far. Core, urban, high walk score, high transit score, around the universities, downtown. It's not to say we wouldn't go to the South Shore eventually, but there's plenty of opportunity for us still on the island.
Do you only look at built buildings, or are you also looking at purpose built, or what's your pro forma? You have to be purchasing in a short period of time, basically, and having the lease up done, or how do you see things?
Here in Montreal, we've only been acquiring existing buildings. a lot of value add product where we can come in and do some renovations, bump up the rents, and it flows through to the bottom line. In other markets, for example, in Vancouver, we're focused purely on developing from the ground up. Goes back to just what I was saying earlier. There's no product to acquire there, so we have to go in.
Excellent. Okay. How do you, this Minto, I'm guessing Minto has an ESG policy, and how do you implement it, and how do you put it in place so that it's different from your competitors as far as the tenant base and also as far as the investors out there?
Yeah, from an ESG perspective, Minto has a long history. On the private side of the business, they've been doing ESG, I think, since the 90s, I want to say. For us, it's always been something that's important to Minto, drives value, and our customers expect it, as do our shareholders. So for us, we're looking at, okay, not only today, but how do we future-proof our buildings, with carbon neutral buildings coming in 2050. We're planning ahead and saying, okay, what can we do today to make it cheaper to get there by 2050?
Right. How do you maintain, another question, how do you maintain investor confidence in a period where uncertainty is so high as far as interest rates and performance?
I think for us, it really comes back to the fundamentals and really selling that story around, restricted supply and huge demand. And over time, those fundamentals will outperform any kind of uncertainty around interest rates and the capital markets.
So more like a long-term, mid-term. I did notice also, I think that a lot of the Minto tenants are also investors in your portfolio. Is that something that you would encourage the tenants to invest in your
Yeah,
your
of
shares?
course. I don't see why not. Makes perfect sense.
2023 started. I feel that the market's strong right now. Now, the institutional players went off market in June, approximately. Now, we are estimating that the interest rate should be sinking end of the year. What's your forecast on when the market's going to pick back up for institutional players?
Yeah, I'm not a big forecaster, but I agree. We're seeing signs of interest rates kind of moderating. Should be good news for institutions coming back to multifamily here in Canada. To date, we're really seeing a lot of private players dominating the investment market right now, while the institutional players are on the sidelines. And yeah, I would expect that to change late this year, early next year.
Right. So Minto has multifamily, but that's not your only asset type. How are the other asset types performing commercial?
So we only have a little bit of commercial. Obviously, the office market doesn't do too well, or hasn't been doing too well since COVID. We've got a little bit of retail, but that's all retail within a larger apartment building. And then Minto does a lot of condo and single family home development, and that market has slowed down a little bit this year with the higher interest rates, for sure. We've seen sales really slowed in the GTA in particular.
Okay. How about the social housing is very popular right now in Canada, of course, and in the province of Quebec. How could we marry or match social housing with newer products and make things work so that we still have performance coming out of it for Minto?
Yeah, the model I like is what Vancouver is doing. So what they're doing is city council will say, in order to get 18 stories, for example, as a rental building, you need to provide 20% of that as affordable rental. So going in day one, you know what you're building, so you can put that in your pro forma, and you can make the numbers work. It's really the uncertainty that developers don't like, and Vancouver's done a really good job of laying out the framework for how to get your approval, how much you need to provide, and you just follow the steps, and you can make the numbers work when it's laid out for you.
Right. Right now, do you have any, is there any lobbying being done, politically speaking, to be able to, get a better view of what's going on in different venues, like say for Montreal, we have a high political situation to try to get social housing in. I'm guessing Gatineau, you probably have the same issues there. There's a large tenant base willing to pay the high rents, but then you have a certain level of quality of tenants that you could pick up, maybe 20% below market value, top market value. Pick that up in your tenant base. Is that something that Minto is looking to do, or?
Yeah, so all of the large Canadian multifamily REITs have actually joined together to do some advocacy work with the government on affordable housing and how do we get supply online quicker. So that's something Minto's been involved in.
Okay. Do you feel that Minto has a large appetite for acquisition, and from what are the parameters of the market that have to come back for you to go back into acquisition mode?
For us, it's really a couple things. The interest rates need to level off here, and capital markets need to come back. So it's availability of equity has to come back.
Excellent. Thank you very much, Patrick, for your time today. It's a pleasure having you, and we're looking forward to see you next year.
Great. Thank you. It's been a pleasure being here.